You see, there are two major international events which were awaited by the markets. The Indian economy and the Indian financial sector is today well placed and very resilient. Credit growth for that particular banking institution is going to be sustainable or not. That is something which we look at. How much of it is going to stock market? Very difficult to quantify. So CBDC we have made interoperable with UPI. Loans which are given for housing purposes or for some consumer durables, etc., that can be monitored. That growth and inflation are now well balanced, well poised.
Good morning and welcome to the first day fast show with Governor. It's a rare honor and privilege to have you, Governor, for the fifth time in a row. Out of 6 years, this is your fifth appearance at Business Standard Summit. Thank you, sir. I'm a bit nervous, so I'll not go by the script. Let me ask you the obvious, that's easy to make me feel easy, is this. As we speak, counting is on in US elections. East Coast, Trump is going all the way. West Coast now just started about half an hour back, 40 minutes, because of the time difference now. There, Kamala Harris is going strong, but it looks like it's Trump all the way. It won't be a photo finish. And what does it mean? Strong dollar, fiscal, pretty loose kind of stuff. And so many other things. And already the US yield has reacted, going up. In India, not much. It's a few basis points gone up. So do you see any kind of impact on the policy front, Trump coming back to US?
Thank you very much to Business Standard for inviting me to this very prestigious event. I think it has become a landmark event in the various financial sector discussions and policy forums that has been established. And I would like to also take this opportunity to compliment Business Standard for attaining their 50th year. I think this is the 50th year. I just got a glimpse of the earlier editions of Business Standard started in 1975, and my congratulations to entire team Business Standard for their journey over the last 50 years. Now coming to your question, Tamal is a very clever bowler. When you say, why do, some batsmen, I'm not saying I'm a great batsman, by certainly not, but some great batsmen, they get out to a very, to a bowler who appears to be ordinary but not actually ordinary. Because you tend to become casual, you tend to go out and hit, and in the process you get caught. So never underestimate the bowler is the principle. Never underestimate the person who's interviewing you, because you will stumble at a point when you become overconfident. So, but anyway, on a serious note, thank you, Tamal, for this interaction. I think I have been having this interaction with you over the last 4 or 5 years.
Fifth year.
This is the 5th year. Now, you see, there are two major international events which were awaited by the markets, the financial markets in particular. One was the US elections, the outcome of the presidential elections in the US. Second, the announcement from China about the fiscal policy support that Chinese authorities are expected to announce, which they have said that they will announce. Now, depending on the size and the depth of the Chinese policy announcement, what it means for the Chinese economy, what it means for the rest of the global economy in terms of Chinese demand, in terms of its contribution to global slowdown of global growth or giving additional momentum to global growth. So that is one event which is awaited keenly over the last few days or weeks. The other one is, of course, the US elections, which are, I think the results are coming out. But in an election, I think it's always better and prudent to wait till the entire counting process is over, because, till the end, it can go either way. Now, so therefore, I don't want to comment who's going to win or what will be the eventual outcome. I will refrain from doing that. But two things are very clear. Overall, from all respects, I'm not just talking about with regard to a financial sector or the trading sector or the geopolitical, in terms of diplomatic relations. I think overall, India-US relations have become much stronger. There is a strategic partnership between the two countries, and that will continue irrespective of who wins. Now, this is not my domain, but this is what I'm telling you is common sense. The second thing is, irrespective of the global developments, irrespective of the outcome of the US elections and what kind of spillovers it will have for rest of the world, the Indian economy and the Indian financial sector is today well placed and very resilient to deal with any kind of spillover which is coming from the external world. We are impacted definitely by what's happening in the rest of the world. What is happening there, we are a bystander, we are watching. But when it comes to our domestic market, as a regulator, we are not bystanders, we are there very much in the market. And I think our overall financial sector and the overall Indian macroeconomy and macro-financial conditions are today very resilient to deal with any kind of spillovers in comparison to many other countries.
Thank you, Governor. Coming back to India, seized and diseased. That's the two words now doing round in financial system in India. If you do something wrong, RBI will announce cease and desist. At one stroke for NBFCs, you have almost maimed them. In private, they say that you don't even give them opportunity to discuss things. Before that, P2P, almost you killed. So what is happening, sir? Is it a new RBI?
You see, there are totally about 9,400 NBFCs. There's a new regulatory architecture for that. We have categorized them on the basis of their scale and complexity. So out of 9,400 all NBFCs, action has been taken against 4. So
four
therefore,
large ones.
Against 4, yeah, large or, but action has been taken against 4. So therefore, you can see that RBI's action is very calibrated, very selective, and it is action is taken in a very measured way. Now, every such action which is taken is not abrupt, it is not sudden. The action is preceded by months of direct bilateral engagement with the individual entities. We find certain broad deficiencies, certain serious deficiencies. It is pointed out to the institutions. We give them enough time to take the corrective measures. In many cases, the corrective measures are taken, and we don't take any action at all. In fact, the number of cases where we found deficiencies and where we did not take any action because the corrective actions were taken and whatever were the regulators' expectations or, regulators' expectations, they were complied with. So the number of cases where we did not take action is actually much larger. Now, that doesn't mean that there is something fundamentally wrong with our NBFC sector or the financial sector. On the whole, the financial sector, the NBFC sector at the system level remains very robust. It's only in a few cases where we do not see adequate action being taken or we do not see action being taken in time and in sufficient, is not up to our expectations or it is getting delayed. Only in those cases we take action. And the detailed reasons for the action is always shared with the individual company. It's not as if they are kept in the dark. Action is preceded by bilateral discussion with them, bilateral engagement with them. They know what are the concerns of the regulator. When we take the action, we also share with them formally the reasons as to why we have taken the action, and we point out that these are the areas where we find deficiencies and we would expect you to act. Our action is not punitive. Our action is corrective. You would have seen in a number of cases where we have taken action after 6 months or 8 months when, the compliance is completed. its compliance is 100% or near 100%, and if you are satisfied that the rest of the compliances will be done in the next few weeks or so, we withdraw the restrictions. It is good for the individual institution itself for its sustainability. It is good for the financial sector, and above everything, it is good for the consumer. All actions are taken in the consumer's interest. And communication, Shri Dovalji talked about, Shailesh Dovalji talked about RBI's communication. You would have seen that the press note which we issue these days when action is taken are fairly explicit. They point out why the action has been taken. So our effort has been to be far more consultative, direct engagement, transparent communication, and measured action. It's not abrupt, it's not arbitrary. You may say I'm being defensive. I'm not, because I think it is necessary in a gathering, in such an informed and well-informed gathering like this, where there are so many, I think all the participants are from the BFSI sector. I think it was very important for me to explain the things in their totality. Sorry for that very long answer, but I think it was necessary to put things in the right perspective. Thank you.
Thank you, sir. It's very, I think all of us should feel happy that consumer protection also has come on the RBI radar. And one interesting part is this: you are very democratic in your approach. You don't care about the stature of the entity, be it NBFC, banks, payments bank. Whenever you find something is wrong, you flag off without caring for how big or how small is the entity. So, sir, let's come back from non-banking to banking. 10 years back, 2014, banks were in deep trouble, very high NPA, so on and so forth. And then the AQR has come, asset quality review, banks have come up clean, and as we speak, they are in pretty good health. But still, you continue to show your concern about credit uptake. You think that banking sector is a little overdoing on the credit front. It seems that if we are looking for a 7%, 7.5%, 8% growth, banks should be in the business of giving credit. But you continuously warn them. What is happening there?
You see, our action and approach is very nuanced. It's not so much that the credit growth is high or low. We don't have a view on that, whether the credit growth should be this much or the credit growth is high or low. It depends on the situation, the conditions prevailing in each bank. There are opportunities to lend. Naturally, the banks will lend. After COVID, there was a spurt in consumer, demand for retail loans, etc. Naturally, the banks and the other lenders will lend where there is an opportunity. There are a couple of things which we always try to monitor. Number one, what is the underwriting standard which the bank or the other lender, the NBFC, what are the underwriting standards? In the banking sector, by and large, I feel that the underwriting standards today in India, there has been considerable amount of improvement. In the NBFC sector also there has been improvement, but there still we find a few outliers where we feel that the underwriting standards need to be made more robust. So again, at the system level, at the system level there is no issue. Let me be very clear. So we always look at what kind of underwriting standards are being followed, whether the underwriting standards are being diluted only to push credit. So that is number one. Second thing is we also look at the liability side with regard to each and every, you are talking about banks, so I will talk about banks. About each and every banking entity, we look about the liability side also, where the deposits are growing proportionately with their credit growth, because there has to be some correlation between them. And we have not hard-coded that this shall be the CD ratio for the banks. RBI has not prescribed any, there is no hard coding. But this is something which I think every bank, every banker understands, that the CD ratio cannot be, completely skewed. So therefore, we look at in the liability side, what is the composition of the liability? Are these short-term borrowings to sustain a medium-term, a loan which has a life of, let's say, 5 years or 3 years? You raise money, certificate of deposit, and based on that, which has a life of up to, let's say, 1 year, and based on that, you are giving credit. And to what extent you are giving credit for 3 years or 5 years. So we see whether the liability and the balance side, the components and the structure of liability and the structure of the asset side are whether they're well balanced. So we look at the deposits. Now I mentioned that we have not hard-coded any CD ratio, but I think the banks are today far more aware about the requirements on this. And CD ratio at the system level today is around 80%, which is, I think, a considerable amount of improvement over what it was a few months ago. But there are, few, just you can count them in some outliers here and there, where also we see that there is improvement. So therefore, we look at two broad factors when it comes to credit growth. One is the underwriting standards. And in underwriting standards, we also see whether the institution, not so much in the case of banks, but in the case of NBFCs, whether it has got the bandwidth to sustain that kind of, high credit growth, and whether in the process the, underwriting standards or the due diligence that is expected of them is getting diluted. So our first focus is to look at the quality of the underwriting standards. Second aspect we look at is the balance between the structuring, the structure of their liability and the asset side. That is, whether the credit growth for that particular banking institution is going to be sustainable or not. That is something which we look at. And what we do is that wherever we see any mismatch or any issue building up, we always engage with the banking entity and flag the issues and expect them to take the corrective action. And I'm happy to say that I think almost all banks are responding very positively to our regulatory and supervisory expectations.
Governor, your concern about unsecured loan, you have been voicing from different platforms. What do you think, that money is flowing into the stock market? People are taking money and investing. That's from there the concern is coming from?
You see, there is no hard data to establish that the money is going into stock market. There are anecdotal evidences that money is going into stock market. How much of it has gone into the stock market, it's very difficult to estimate. We did a sample survey internally. It was a quick sample survey internally, and based on that, we have a broad sense of what's happening in that particular area, since it was not any survey result which we share outside should be, done. A survey has got certain essential features. So therefore, that survey was a quick survey. So the outcome of that, I am not in a position to share. But I would not say exactly, but we broadly have a sense of what is happening. We have tried our best to quantify how much possibly could have gone into the stock market. But again, I cannot vouch for that figure because it was just a small, quick sample survey. What is necessary is that the banks themselves need to also look at the end use of the unsecured loans which they are extending. It's very difficult for the banks to ensure that it is indeed gone for that. Loans which are given for housing purposes or for some consumer durables, etc., that can be monitored. But loans, unsecured loans, open-ended, very difficult to monitor. But to the extent possible, I think there is a need for banks to also try and monitor that, which many of them are doing it after our discussion with them. So we are very watchful of that segment. And we have, as you know, from the regulatory side, there are standards, norms which RBI has prescribed with regard to, for example, IPOs. Earlier, the NBFCs could give very high amounts. There was no restriction. Now we have restricted it to 1 crore. Banks also loans against shares, if I remember correctly, it's about 20 lakhs. And for IPOs, it's about 10 lakhs or so, if my memory serves me right. So there are norms prescribed. How much of it is going to stock market? Very difficult to quantify. But we are trying our best, we have tried our best to monitor and get a sense of what could be the total quantum which could have gone to the stock markets. And I think overall for the banking sector, I do not see it as a major risk at the moment. Individual institutions, the position may vary. We are monitoring it. But at the same time, let me also qualify by whatever I am saying is that there is no hard data to establish it, how much has gone, but we have a broad, we have done a broad assessment, and we feel that at the moment, it's not something which can cause systemic instability or anything of that sort.
Thank you, Governor. So the CAR-1 IPO financing or the loan against shares are already put in place. Governor, there's a widespread perception that financial economy is growing much faster than real economy. And, but you are sticking to the most bullish estimate, 7.1%. And there is not a single agency, be it multilateral or within India, is just in sync with Reserve Bank of India's growth estimate. I remember last year in Business Standard Summit, you spoke about one particular quarter's growth. You hinted that there will be a positive surprise, and everything hit the headlines. So I'm, on behalf of all the news agencies also, I'm fishing for some headlines. So is it time to actually take a relook at your growth estimate?
No, I remember.
You seem to be very, very bullish compared
no, I
with
remember
everybody.
last year at the BFSI, this event, I had said that the growth is likely to be, I think, again, 6.5, which we had given initially. I had said it is likely to touch 7% or something like that. And it was carried by the Business Standard very prominently the next day. And indeed, the growth was not only in excess of 7%, but it exceeded 8%, which I incidentally mentioned in my interaction at Davos, where our projection was still well below 8%. I said I will not be surprised if growth touches 8%, but I am no astrologer. Very difficult to say. Things in a dynamic world, things can change very fast. But you see, on the growth front, let me put things on the right perspective. I said it in another interaction recently. And before that, let me mention that as you talked about international agencies, lest I forget, the IMF in its World Economic Outlook, which was released, on 23rd or 22nd of October, just on the eve of the IMF, the spring meetings which were held, IMF has projected 7% growth for India.
Lower than yours, 7.1 yours.
No, ours is 7.2.
Yeah, 7.2. Yeah.
Now, IMF has projected 7. So therefore, I think that needs to be also, placed on that fact needs to be placed on the table. And IMF, I think, among the international institutions, it is certainly the best placed to make assessment of individual countries. Now, so far our economy is concerned, the data which is coming in is now mixed. The fast-moving indicators which are coming, the high-speed indicators, as I call it, the high-speed indicators which we monitor, there are about 70 or 80 of the high-speed, the fast-moving, these high-speed indicators which we follow, which we monitor. In that, I find that it is only IIP numbers and FMCG sales in the urban sector. FMCG sales urban and IIP, which are, which have considerably moderated. But other than that, the GST e-way bills, the toll collections, the air passenger traffic, the performance of the steel industry, the performance of the cement, that is, what you call the steel consumption, sale of, the steel consumption, cement sales, the automobile sector in October, about which so much was talked about. Automobile sector in October has done exceedingly well. The growth is about 30%, of which the two-wheeler sales are something like 38 point something, about 38, 39%. Four-wheelers, it's about 23%. So the automobile sector, the data that is coming, it is very robust, very strong in October. So overall, therefore, if you see the incoming data presents, it's a mixed picture, but where the positives outweigh the negatives. And we are beginning the second half of the current year. The first quarter growth, it's well known to all of you, was affected because of low government expenditure, both center and states, perhaps because of the elections, the elections to the parliament. And also the first quarter, what happened is that, which was again clarified by the RBI State of the Economy Bulletin article, is that the subsidy payments by the state were very high. So to arrive at GDP, it is basically, your GVA plus indirect taxes minus subsidies. Subsidy outgo was very high in the first quarter. So therefore, that also had that also pulled down the GDP number, lower government expenditure. Government expenditure has started picking up. Both revenue and capital expenditure of center and states have started picking up. Subsidy outgo remains an issue. Second quarter, I find subsidy outgo, payment towards subsidy of the general government has gone up. So that will have some impact, which may have a negative impact on the GDP number. But down the line, I think economic activity remains quite robust. Agriculture sector has done very well. Yesterday, I think the initial estimates of Kharif production came, and it's about 6% higher than last year. Services sector is doing very well. Cumulatively this year, the services exports have grown by about 14%. Manufacturing IIP, which had slightly dipped in September, in October, it has again gone up from 56 point something to 57.5 or so. Services sector PMI, which came out today morning, I talked about manufacturing sector PMI. Services sector PMI, which was the data which was released at 10:30 as I was sitting here. There is an uptick. It had come down, last month from about 57 to 56. Now it is back at 57 something. So therefore, second half of the year is there. So therefore, I would not rush to declare that, economy is slowing down. I would wait. And August rains also has been a factor which has affected economic activity. So data that is coming in, to summarize that long answer again, data which is coming in is mixed, but the positives outweigh the negatives. And by and large, underlying economic activity remains, I think, fairly strong. Whether I am optimistic or pessimistic is not the issue. I'm just going by the hard, whatever evidence is available.
Governor, from economy, shift to this, something very close to Reserve Bank of India's heart, CBDC. I remember even a year back, there are shops outside Reserve Bank of India, Honeyman Circle. They were using CBDC, encouraging the buyers to use CBDC. Banks were sending email continuously to have that digital currency. But it's going nowhere. Is it gone into hibernation? Because people are saying, if you have UPI, why do you need CBDC? You keep on talking about cross-border money flow, it will be much cheaper and all. But we don't see, it is not yet taken off. Is that correct assessment?
No, I will disagree with that.
Okay.
You see, we have to remember that CBDC is, what we have done in CBDC, it's a pilot. It's a pilot project. It is still in experimentation stage. And we never intended that from day one we will go for a nationwide rollout or anything like that, because after all, we are dealing with currency. The safety and security and the robustness of the design and its, the security aspects is very important. It has got also other implications for monetary policy for the larger economy. So it is a pilot which we are doing. It's at experimentation stage. There are learnings every day with regard to design features, with regard to the possible use cases where all CBDCs can be used, with regard to its potentialities. So we are on a learning curve. And we have said, and I have myself said, that we are in no great hurry to launch CBDC. There is no target date. We are experimenting it. When we are convinced that, well, this is the time to launch it, we will launch it. So, therefore, what is in a pilot should be looked as a pilot. We don't want to announce a nationwide launch in a great hurry. So, CBDC is very much there. New use cases are coming up every day. For example, giving CBDC, credit. Some banks have extended credit in CBDC to tenant farmers. Now, tenant farmers who do not have a land title or who do not have a formal registration of the tenancy agreement, to tenant farmers also, the bank, I think many of the bankers are here today. I would request some of the bank CEOs who are present here, who are into CBDC experiment, etc. Perhaps they may like to touch upon it and highlight it. So loans to CBDCs, programmed loans, that is programmed CBDC loans to tenant farmers, so that it can be used for a specific purpose. Like, for example, let's say to buy fertilizers. That CBDC can be only encashed and utilized in a fertilizer depot. It cannot be used elsewhere. Carbon credits also in the agriculture, that is also on this thing. That's also under experimentation. September, in fact, in this very center, this Geo Center, when the GFF was held around, I think 30th August, the Prime Minister was here, and he talked about CBDC, etc. And then we got this, after that, we had, when he visited our stall, we explained to him what are the CBDC features and all that. Then he was also very keen to know about what are the applications of CBDC, etc. Then the idea came up, and subsequently, I think in around the middle of September, the Subhadra scheme of the state government of Orissa, where they were giving certain cash support to women, to, that also was given in CBDCs. So there are many use cases in CBDCs. Corporates are also now giving CBDCs to their employees. Instead of giving them some vouchers for lunch or, lunch vouchers and all, it is now being given in CBDCs. So there are many user cases which are coming up. There is greater interest in CBDCs now under the aegis of the BIS Basel, that is Bank for International Settlements, in CBDC, for cross-border payments. So CBDC is therefore in experimentation stage, in pilot project in India. We are slightly ahead of many advanced economies, quite ahead, I would say, ahead of many advanced economies in this regard. But internationally, there is greater, expectation about CBDC. So CBDC we have made interoperable with UPI. So programmability, interoperability, the facility of making offline payments are the positive features of CBDC. And I think CBDC will facilitate cross-border payments in a much more efficient and cost-effective manner than anything else. About coexistence with UPI, about why if you have UPI, why are you having CBDC? I think both can complement each other, both can coexist. And let me leave it at that, because if I go into further details, I don't want to deprive you of other questions. And I think I would expect, it will be really good if the bank CEOs also touch upon it. No compulsion to the bank CEOs, it's their choice.
Thank you. Okay. Thank you, Governor. This is one question, I'm sure you would not like it, but just on behalf of everybody, I want to ask you one little sensitive question. I mean, people have been writing columns also on that and all the erudite academicians, economists and all. You meaning Reserve Bank of India, paid 2.11 lakh crore dividend this year. Is the highest ever, against 87,416 crore the previous year. And of course, the Jalan formula was followed when he's paying money to the government and all. Now, much of this money, how does the money come from? RBI's profit is from essentially in foreign, there's buy-sell swaps, what you're doing in the foreign exchange market. That's how the money is generated. Now, the feeling is the way the Reserve Bank of India is doing it, so the historic value at which the dollars have been bought. Now, it's now getting out of your coffers, and the new dollars are coming with is much higher priced and all. At some point of time, RBI will not be able to continue with this anymore, because your average cost of your portfolio, I mean the dollar portfolio, is going up and up, because historically low dollars have already been sold out. So is there any merit to what they're talking about?
No, I think that's not at all correct. Let me put things, that's not at all correct.
Okay, sir.
So I'm sorry to disappoint you.
Yeah.
Before that, you said 87,000 we paid, then we paid 2,11,000 crores. Before 87, we had paid only 30,000 crores. So therefore, there is, ups and downs. And it has got nothing to do with currency swap, etc. You look at the RBI balance sheet and the annual report, which was released, sometime we released it, I think, in May this year, because within 2 months, as per the RBI Act, it has to be published. So the RBI accounts were finalized, and it's there in the annual report. And sometime in May, we have released it. So if you look at the annual report, it's very clear from where this additional income has come, and that has resulted in this, payment of 2,11,000 crores to the government. It is primarily because 2 or 3 major factors. One, this time the requirement for, for provisioning in the contingent fund, in the contingency fund. The provisioning requirement for the contingency fund this time was much lower, because the earlier balances were fairly high. In the previous year, we had transferred more than 1 lakh crore to the contingency fund. This year, the transfer was about 25,000-30,000 crores. So the requirement of provisioning was less, as per the Bimal Jalan committee recommendations. And our entire income this time, the additional income, the big income we got, was entirely from our foreign currency assets. Foreign currency assets would mean the deployment of our reserves in the securities, in the government securities of other countries, whether it is US government securities, or it is dollar denominated, or it is euro denominated, or pound sterling denominated. So it is basically the income from the foreign assets, the interest income from foreign assets. Then the exchange rate fluctuations also. When exchange rates go up, naturally sort of it is, you convert that into, when the exchange rates, meaning when there's a depreciation of the dollar vis-a-vis the rupee, or rather it's the other way, when the rupee depreciates vis-a-vis the dollar, naturally in terms of rupees, each dollar is more. So therefore, it is primarily because of the interest income on foreign currency assets, and it is because of less provisioning this year. The details are there in the annual accounts, and I think it's there for you to see. It has got nothing to do with this buy-sell or sell-buy swaps. RBI does not have a profit and loss account. There is no concept of profit in our balance sheet. What is in our balance sheet is surplus transfer. And the surplus is originating from factors which are not controlled by us. Our interest income was high because the US Fed and the other advanced economies, central banks decided to hike their interest rates. So when their interest rates went up, naturally our interest income went up. So we don't control the factors which contribute to our interest income. So therefore, it is an outcome of what is happening all over. And what we do is a pure accounting exercise, very transparent. It's there in the annual accounts.
Thank you, Governor, for the clarification. Thank you, I stand corrected. Sir, you are a great communicator. Everybody says that. But now, in the last policy, you changed the stance, which is clearly pretty dovish. But subsequently, wherever you have appeared at a couple of places, it sounds that the chance, I don't want to use the word hawkish, but there is a little bit of disconnect between what you have been talking now and the change of stance. It's like people are expecting rate cut will happen. This is the precursor to that. And again, you are saying, no, inflation is going up, everything is, no. What exactly? When this is not your communication, I don't know, sir. That's what we see, that it's not the way we know you communicate and what's happened in the past few weeks.
No, I think our communication has been very consistent. If you carefully recollect what I said in my monetary policy statement, and it's a written statement which is available in the RBI website, what I said is that we changed the stance, and we said that it gives us flexibility and optionality to RBI to decide the future course of action. We did that, we changed the stance because we felt, the Monetary Policy Committee felt, that growth and inflation are now well balanced, well poised, and it was appropriate to therefore change the stance. That's why we changed the stance. I also said there are significant risks. In fact, my statement, if you see, I said there are significant risks. I repeat, it is there in the statement. There are significant risks. I repeat, significant risks on the downside. In the significant upside risks to inflation. So I had reiterated the word significant, the phrase significant risks. I had said significant risks. I repeat, it was there in the statement. I repeat, it was there. So therefore, I had emphasized that there are significant risks. And I had said why we see the significant risks: because of continuing geopolitical conflicts, geoeconomic fragmentation, the climate-related, the weather-related risks, and the commodity prices going up. The latest data which was available to the MPC on the eve of its meeting was the FAO data with regard to food price index that had shown an uptick. Metal prices had also gone up. Some commodity prices were also going up. So we had flagged these risks. So therefore, I think the message was very clear that, look, we have to be very cautious in our future course of action. It should not be assumed that I have done this, we have done this, so therefore the next step is a rate cut. A change in stance doesn't mean that the next step is a rate cut in the very next meeting. It's not so. And what I have done subsequently in other interactions with the media and outside is I have only reiterated that. So there is consistency in what we have done, what we have said. Now, if there was some amount of misinterpretation, I have to see why that misinterpretation came. Probably misinterpretation, it's not so much of misinterpretation, but I think this is expectations, market expectations, like inflation expectations. I think it is market expectations which perhaps is, sometimes works to pressurize the central bank, but we are not under any pressure to, to go for the next step. The next course, on a serious note, has to be taken very carefully. So far as inflation is concerned, I had said in my monetary policy statement very clearly that September and October, the inflation prints are expected to be higher. September came at 5.5%. October, we had said that, and I reiterate it again today. October inflation CPI numbers are again going to be very high, perhaps higher than the September number. So therefore, we had warned it in my monetary policy statement. And so therefore, our communication, I think, is fairly consistent.
Thank you, Governor. So those who are looking for a headline, you have heard, Governor, that October inflation will be even higher than September. And those treasury managers of various banks in the audience, they actually prompted me, please ask this question, why the change or stance was changed, etc., etc. So you have got your answer. So, sir, it's
a very valid question. Yeah. The market has a right to ask questions. I'm happy that you asked questions. So I hope to the treasury managers I have made our position now sufficiently clear.
Okay, so let's on the last few questions, let's have on a lighter note. We have on a lot of serious stuff. We have 2.5 minutes left, but we can, with your permission of Business Standard, we can have a few more minutes, right, sir? So, sir, one is this, your
provided
policy.
The audience has interest.
Yeah, your policy statement. Twice you use animal imagery for inflation. One's elephant and one's horse. Now, if I ask you to use an animal imagery for Indian economy at this point of time, what would be that?
I think it's the RBI logo,
Lion?
which is a tiger.
So,
You see, the tiger is known for two things. I'm talking about tiger, the animal. The tiger is known for two things. One, strength. Two, agility. Today, the Indian economy has got strength, and RBI continues to be agile. So I think the logo of RBI says it all.
sir, you are a student of history. 6 years, not too many governors. You're the second, if we presume that December 10 is your last day. No, I'm not going to ask this question. I mean, a lot of people ask about the same question that your extension, was it coming for how many years? I am not, this question is not for you, but for the audience. Who wants the governor to be there? Just raise your hand. Entire house, sir. Entire house wants to be there. So
Don't go by what they say in my presence.
Okay.
You ask them in my absence.
okay, sir. So
And do.
So tell me, sir, I mean, what keeps you, you call it, you yourself is a lion actually, or tiger, the agility and also the stability. You are a student of history, so what is the key thing? I mean, what? Listening to people, keeping your antenna alert, common sense, or you studied economics, spending midnight oil? What exactly the key to your success?
No, I think it's for keen observers of RBI over the years. Shailesh Doval is there, Bhattacharya ji is here, and there are so many other faces I see here. It's for keen observers to say that. But if you ask me, I think I would like to say that the inherent strength of Team RBI, their analysis of situations, their proactiveness and agility. So it is a strength of the Team RBI. For me, it is perhaps my long experience of having worked in the finance sector. And our effort is always to be proactive, to try and, try and read the situation, to do, to identify the potential risks and act in time and act proactively before the water spills over. So we have tried to be as proactive as possible. Just to give an example, when, one of the mutual fund schemes during the peak of the pandemic, it collapsed. Let me not mention the name, it's known to all of you. It happened on a Thursday. We were aware that it was happening, so we were monitoring it. It happened on Thursday. We saw the market response on Friday. Saturday, Sunday we worked. Monday, when the market opened, we announced a liquidity support of 50,000 crores. And the problem settled down. So our endeavor is to act preemptively, to act in time, to remain agile, and try and identify potential risks before they become too big. Basically, the effort is to constantly, smell around, look around, and to see what are the possible risk buildups. So I think overall this has worked. And after having said that, let me also say that all the stakeholders in financial sector have also equally contributed to what the Indian macro financial sector is today.
Thank you, Governor. There are a lot of things to learn from you continuously, and the way you communicate. I still remember in YV Chavan Hall, there's a book release of Dr. Reddy's book, and you launched the book. You were pretty fresh at that point of time, probably 6 months old, and then somebody asked a question about bureaucrats. Then Dr. Reddy said, well, there are leaders to whom you get into the cabin and ask certain things, and that leader says, yes, it's done, but you come out not so happy. And there are leaders, then you're waving at you are on the first row sitting there after the launch. You go to his room and come out with a plan. He said no to that, but the way he says that all, you come out and you're so happy. So you are, sir, one of the contributing factor also is this. Even if you say no to somebody, you say it in such a way this gentleman or the lady or the institution never unhappy. They're always happy with you. I don't think, be it investors, be it banking system or NBFC, everybody else so happy with the governor. It's very rarely it happens.
You see, Dr. Y.V. Reddy was an eminent central banker, not only in India but internationally. I have a lot of respect and regard for Dr. Y.V. Reddy and his contribution to India's financial sector and to the RBI. But coming to your point, I think one of the basic things that you learn in civil service is the art of saying no.
Yes. Sir, oh, I am noticing now on your finger, this is called splint, right? This is splint? Yeah, it's not a band-aid. Typically, all you know, those who follow cricket, this is typically injury where the first slip fielder gets catching the ball. The most difficult catch you will find very often they are having the splint, sir. So if I may ask you, in 6 years, in macro and micro, there are so many crises you handle. COVID and then ILFS, DFHL, SREI, Yes Bank, Paytm, RBI, so many and all. So what was the most difficult catch? I'm not saying that just now it happened, that's why you get the splint on your right hand. What was the most difficult catch for you?
You see, every catch is as serious and as important as the previous catch. Sometimes you drop what looks to be an easy catch, you drop it out of carelessness. Sometimes you take very difficult catches. But about my splint, not to worry. I can still take a catch today. And
That's...
And, there are, each challenge looks bigger than the previous one. So therefore, I think it is difficult to say which challenge was bigger, which challenge was not so big or lesser. It's very difficult to say because never underestimate a challenge.
Thank you, sir. It's very, very difficult to have a conversation with you. I can't beat you. You always come up winner. So last thing, sir, very last is this. You have, if I'm not mistaken, you have announced or made statement 34 monetary policies. And December will be 35th. And if you will continue, this is a separate story. Now, each and every policy of yours, unlike your predecessors, has a Mahatma Gandhi quote everywhere. So can you tell us which message of Mahatma Gandhi, which quote is the closest to your heart? Because you have used different quotes at different times, depending on the mood, depending on the economic situation, depending on everything outside and inside everything. But if I ask you one Mahatma Gandhi quote which is closest to your heart, what will be that and why?
I think that's almost like asking a question as they ask in some contest. It's a googly. So let me try and play it. You see, I think we started, if I remember correctly, I started quoting Mahatma Gandhi when the COVID pandemic started. And the first few, I would say that it started, the first announcement, I remember the first 3-4 meetings during, the announcements in COVID, I distinctly remember the dates in end of March, 27th March, then I think 17th April, then 22nd May, and then I think it was 5th or 6th August, because these were very important and I always remember that because, I almost remember the dates. I think every Mahatma Gandhi quote was contextual. If you see, or even now also, every Mahatma Gandhi quote is contextual, something we want to convey in a particular meeting, and we find a quote from Mahatma Gandhi which is appropriate for the occasion. So every quote from Mahatma Gandhi is contextual and appropriate for the occasion. Now, my favorite quote, I think perhaps the first few quotes when the COVID started around March, April, May, I think there are 2 or 3 quotes would be my favorites. And what was our endeavor at that time? You see, there was a crisis of confidence. There was a lot of anxiety. There was a nationwide lockdown announced in COVID. Every activity had come to a standstill. Financial markets were in a lot of anxiety as to what is going to happen. So our job was to give confidence to the markets by words and action. By action, I mean by cutting the rates, interest rates, by announcing moratorium, by giving liquidity support, open-ended liquidity support, by giving targeted support, by giving, taking so many other measures, announcing moratorium, followed by announcing a resolution framework for the, the loan outstandings of banks and NBFCs. So those were measures taken through action. Our communication also had to be appropriate to the occasion. So the spirit behind our communication was to give confidence to the markets, was to build confidence to the market to, sort of to address their anxiety. So in that background, I think I remember, I don't exactly remember the quotes. I think there was one quote from Mahatma Gandhi which says that when the horizon is the darkest, it is faith that prevails and comes to your rescue, or something like that. Then there is another one: in the midst of death, life persists. In the midst of darkness, light persists. Something like that. So the idea was to give confidence to the markets by action and by words. So therefore, our communication, is always, so favorite quotes were one of the first few quotes from during the period of the COVID. And I think what we are now doing is basically contextual, appropriate for the occasion. That's how we select the quotes.
Thank you, Governor. You are so candid. You spoke from heart. We have no complaint, and nothing could have been better. On behalf of Business Standard, on behalf of entire audience, on behalf of who are watching on YouTube, thank you, sir. Thank you.
Thank you very much. I see somebody raising hand, but I don't think we are taking audience questions. You can engage bilaterally, perhaps, but it's you. Yeah.
Yeah. I mean, you want to take one question? No. No,
because I don't know, if you take one, then there will be others who will say, I didn't know, had I known, I would have raised my hand. So therefore, I'll engage with you bilaterally. It's not fair, And there are other panel discussions, so let's not delay it. You can bilaterally engage. Thank you. And I would like to once again thank you. Thanks, Business Standard. And I would like to also convey my best wishes to Business Standard on this momentous year in its journey. And my best wishes to all the participants. You are all from the financial sector, from the BFSI sector. I think the macro-financial stability of the country depends as much on you as it depends on us and other policymakers. I think between the regulators and the sector stakeholders, there has to be continued cooperation to keep our economic, to keep our financial sector healthy and future ready. Thank you very much.
Thank you, Governor.